Today, we're diving deep into the playbook of a $5.5 billion biotech hedge fund, Armistice Capital. We're going to see exactly how they place their bets in what is, let's be honest, one of the riskiest sectors on the planet. So that really brings us to the central question, right? Biotech is an absolute minefield. A company's entire future can get wiped out or, multiply overnight based on a single letter from the FDA or the results of just one clinical trial. So in a world like that, how does a massive fund like Armistice not just survive, but actually come out on top? All right, first things first, let's meet the main player in this story. Who exactly is Armistice Capital? Well, Armistice was founded way back in 2012 by Stephen J. Boyd. It's a New York-based hedge fund, and they have a laser focus on two things: healthcare and consumer sectors. And Boyd himself, he has that classic top-tier resume. We're talking Wharton, McKinsey, a bunch of other hedge funds before he decided to launch his own thing. They've really carved out a serious name for themselves in a very, very tough market. And just to be crystal clear, we are not talking about a small shop here. This is a fund managing roughly $5.5 billion. That kind of scale gives them some serious firepower. Okay, so they've got all this capital. How do they actually manage it? Well, it all comes down to a really specific philosophy. Let's break down their playbook. At its heart, Armistice is all about what's called event-driven investing. Now, this is what's so cool about their strategy. They aren't just buying good companies and, hoping they go up over time. No, they are placing very specific bets on known events on the calendar, things like an upcoming FDA decision or a make-or-break clinical trial result. They're basically investing in catalysts. You can really boil their whole approach down to 4 key steps. First, of course, they do the deep fundamental analysis. Then, and this is the secret sauce, they identify that specific catalyst. Step 3 is all about the math. They're hunting for what they call asymmetric returns. That's where the potential win is just massively bigger than the potential loss. And finally, this is not a set-it-and-forget-it strategy. They are constantly managing the position, and they are ready to bail the second the story changes. All right, so that's the theory. Now let's see how it actually works in practice. We're going inside their portfolio to look at the actual stocks they're betting on right now. So this chart right here, it tells a really important story about their style. I mean, sure, they hold hundreds of different stocks, but their top 10 positions make up over 16% of their entire reported portfolio. This is not some broad, passive index fund. This is a series of very concentrated, very focused bets. And here it is, the lineup. You can see it's a mix of therapeutics companies, a medtech firm, and check this out, one position that's held entirely with call options. We're definitely going to get to that one. These are their champions, the companies they believe have just the right mix of fundamentals and those all-important upcoming catalysts. Okay, now for the fun part. We're going to zoom way in on 3 of these holdings because each one tells a really unique story about how Armistice actually puts its playbook into action out in the real world. First up, we've got Travere Therapeutics, ticker TVTX. This one seems to fit right into the core growth driver part of their portfolio. Yeah, the analysis here basically says it all. This is a bet on a company that's really starting to hit its stride. They work on rare diseases, which usually means they have strong pricing power, and they've just recently started turning a profit. And not just a little profit, they've got huge earnings growth expected. So here's the trade-off. On one hand, you've got this massive recent earnings beat, like almost 200%, and just gigantic projected growth. But on the other hand, the risks are all about execution. Can they actually pull off the launch of their new drug? Are competitors or insurance companies going to get in their way? Armistice is betting that, yes, they can pull it off. Next up, we have a totally different kind of bet, Cytokinetics, ticker CYTK. Forget about steady growth. This is a pure, high-stakes play on a single make-or-break event. This quote just nails it. Armistice isn't even buying the stock here. They're using call options. This is a clever way to create what investors call convexity. Basically, a situation where the potential upside from a good outcome is absolutely massive, while the downside is strictly limited to the small amount of money they paid for those options. I mean, just look at the contrast here. The bull case is all about that one binary event, that FDA decision. But the company itself, it's losing a ton of money and is even facing litigation. Armistice isn't betting on the long-term health of this company. They're making a highly calculated, leveraged bet on a single yes or no from the FDA. And for our third story, we've got something completely different again. This is Dentsply Sirona, or X-ray. And this, my friends, is a classic deep value contrarian bet. It's a turnaround play. So, in plain English, what they're doing is buying something that the market currently hates. X-Ray is a dental equipment company that's been struggling, but Armistice seems to believe its underlying business is still strong, and that all the negative feelings have created a bargain. And this slide just perfectly captures the classic value investor's dilemma. On one side, the stock is cheap and the company's profit margins are still really solid. But on the other side, recent performance has been terrible. Revenue is down and the stock has been absolutely crushed. Armistice is betting that management can finally turn the ship around. So, after going deep on these different stories, let's zoom back out. What does this whole lineup of bets really tell us about the Armistice strategy as a whole? It really seems to come down to a three-part portfolio recipe. First, they build a foundation with stable, profitable, cash-generating companies like Regeneron. Then, they layer on those core growth drivers like TVTX. And finally, they add the spice, the high-risk, high-reward bets like CYTK and X-Ray. And that structure is their secret weapon against all the volatility. The stable anchors give them a cushion, which allows them to take these really smart, calculated risks on the spicier bets that can deliver that massive, asymmetric upside they're always looking for. Which really leaves us with a final thought. When you deconstruct their playbook, it seems like Armistice's success in biotech isn't just about picking scientific winners. It's about a rigorous, disciplined process of identifying catalysts, calculating risk, and structuring bets to master the odds in an industry that's famous for defying them.